All right, welcome everybody. This is a pre-recorded This Week in Crypto. This time around, Maxim is traveling today. We'll probably be back with the live stream next week, but for today, we'll just do a quick short recap since I also did a market recap with Tony from Thinking Crypto just yesterday as well, and it's going to be published kind of side by side with this video. Overall, crypto markets did have a nice positive week. A nice change of pace after a pretty depressing June for a lot of people, where Bitcoin dropped around 14% during that month. But it's been up over the past few days. And if we look on the weekly time range, it's up about 3.8% over the past week. Ethereum actually having a pretty large week, up 13% with a nice rebound back to about 1730. We can see XRP here up 9%, Solana up 17%, and then big weeks as well from Zcash, Cardano, and uh, Zcash, Stellar, and Cardano all up in that 16 to 18% range. Bitcoin Cash over here, near up 17%, Uni and Sky rounding out the best performers among the top 50 or so market caps in crypto. Not a lot of negative notables outside of Canton down 7%, WorldCoin down 8%, and Pi down 6%. Overall social volume about as flat and similar as can be as far as this week versus last related to Bitcoin discussion. I think, from the discourse I'm seeing, and we'll go over some specifics, but the overall narratives are continuing to be, bulls and bears battling around that 60K level, deciding just how low or how high we can go with it. Whether Sailor and this STRC saga is going to continue to sink crypto, as it's been either rightfully or wrongly identified as kind of the catalyst to a lot of this bloodbath that we've experienced throughout 2026. Obviously, the never-ending geopolitical tensions that seem to continue to go on between the U.S. and Iran, the Middle East situation, Israel and their involvement as well. This is all impacting crypto in unpredictable ways, and you know, I think the narrative has shifted a lot to stocks and crypto, which we can see here is an interesting one because we've reached the point where crypto traders are so convinced that crypto is the inferior investment, or at least for now, compared to equities, that it's actually helping to allow Bitcoin to play catch up even when the S&P is a little bit down over the last couple of weeks. If we look at, for example, let's just go, we'll just say since the 22nd, even though both are down a bit since the 22nd, it's got to be an even shorter sample than that because it's been mostly notable just in the past week. Yeah, I mean, this is a pretty decent example right here. Since June 30th, call it the last 3 stock trading days. Today, by the way, is an off day for the S&P 500 to celebrate the 4th of July and the weekend festivities. So there won't be any trading today, but the past 3 trading days between Tuesday, Wednesday, and Thursday, we've seen the S&P down about 0.3% during that time, whereas we go all the way to present time, Bitcoin is actually up 5.5% over that same time period. So to me, this is actually a very good sign, especially with the way Bitcoin and cryptocurrencies have been so reliant on equities needing to perform well. The optimists out there have been hoping for this kind of situation for quite a while, where there will eventually be a catch-up period. I know it's a pretty small sample size right now. We're not going to get too excited and start to go crazy and say that now's the time that Bitcoin's going to propel upwards, even though the S&P 500 is staying flat. I'm not going to go that far, but there is an argument for it, especially when we look at things like MVRV, which I'll pull up now. And I talked about this with Thinking Crypto as well on my recent chat with him. The MVRV for 30-day traders is actually at about even right now, 0.05%, whereas the 365-day MVRV is still sitting way down at negative 30%. Pretty good sign that we still have meat on the bone for a nice run up, aka a catch up period, where we do get back to that 0% mark eventually. Doesn't mean we're going to get a huge relief rally to get there. Sometimes we might just stay relatively flat or have a very slight uptick that isn't that exciting. And suddenly enough time passes by where the MVRV just evens out due to the nature of MVRV being a time based metric. But I still think that this indicates that we are at a relatively low risk time period where there is a much higher ceiling than there is a low floor. Um, Transaction volume about even for Bitcoin. While we're here, we'll just run down a few of the on chain and social metrics. Active addresses, network growth. Did see a little bit of a spike right at the bottom. I'll make the price a little more granular so you can see how the time kind of matched up here. So, right at the bottom here, when we got down to about 58.1K, 57.9, looks like it was the local bottom. We saw the largest active address spike in about, call it 7 weeks or so. That's not a coincidence. That was kind of the indication that we had some capitulation going on. I tend to run through these metrics pretty quickly in a lot of recent This Week in Cryptos because it's just kind of a slowly fading down trend line. But when we do get anomalies like this, it does help uh, kind of illustrate how important these on-chain metrics can be in terms of identifying pivot points in prices when they start to go up or go down. Even this one, you can barely see the orange, but both active addresses and network growth on this day, May 9th, kind of signaled we were in a little bit of trouble because prices were going up, 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 up. And this was something related to FOMO. I'm not quite sure if it was news related or simply just people reacting to this, uh, what call it, 5 week stretch where Bitcoin went up about 25%. We get this huge surge in new addresses created and current addresses transacting, and then suddenly we free fall. Many reasons why the free fall happened besides just this, but these are often catalysts and nice foreshadowing signals that you can take advantage of on both sides, whether prices are going up or prices go down. You want to see, you can expect that the probability of a downturn after prices go up or the probability of an upturn after prices were going down is much higher when you see spikes in on-chain activity for any asset out there. So there's MVRV we just talked about. Notice that the funding rate is starting to get a little high. Um, a bit concerning. The last time we really saw funding rates this high was here or even all the way back here. And you could see that it did foreshadow downturns. That said, these are mostly neutral marks. I know they're the highest in the last 6 months, but there have been times where funding rates got much, much higher, like here back in July 2025. This was a big warning signal. This in August was a big warning signal as well. So look for bright green as a bit of a bearish signal and bright red as a bullish signal because funding rates always tend to skew toward liquidations on any exchange out there. Exchanges make money when that happens, and it's one of the better counter signals out there, especially when it's extreme. Bitcoin wouldn't be the best example of extreme funding rates, but you know, much more emotionally driven assets like Doge, for example, like their funding rates can be a really nice signal for you to keep tabs on due to how quickly people turn on a dime and decide I'm going to, do a 100x long or a 100x short because I either believe or don't believe in this asset anymore. And then that can propel prices downward or upward very rapidly. Whale transactions, look at this. Just over the past year, how much it's dropped over time. It's been fairly steady over the past 3-4 months, but um, you talk about how whales are impacting prices, and we'll get to that next to see how much they're actually accumulating or dumping. But the actual activity, really going back to right around when the war started, it was right around February 28th. We had a final spike here as the world tried to figure out whether we were gonna come to a quick solution or not. We obviously didn't. And then I think that the main reason whales have been more gun shy about making big moves is because of how unpredictable that situation has been. Um, so yeah, it's noticeably lighter in the whale transaction um, metric compared to what it was all the way back last year through, you know, mid February or so. And then it just started to fall off a cliff. All right, let's look at what the actual um, specifics are related to how Bitcoin whales and sharks are doing versus retail. And it's not a pretty picture for the key stakeholders right now. And you do need to be a bit cautious when this kind of picture continues to uh, dominate this chart here. We see that the 10 to 10K BTC wallets are fading down. Um, that light green line represents the actual total amount of coins held, and they've dumped about 70,848 Bitcoin since April 24th, called out about 10 weeks ago. Meanwhile, retail, despite them not holding a lot, this retail line does represent a big part of how small traders are perceiving the markets right now, and they are just continuing to scoop up the dips right and left. Um, these lines, red lines, that is, they do not always go up, but they've looked that way for most of the past year. Even though we got that all-time high in October of last year, that was mostly because the sharks and whales were accumulating up a storm at that time, while, at least temporarily, you saw that the red lines were going down. That's the ideal setup. But once the red lines are going up, representing the small key stakeholder, or excuse me, the small retail that usually gets it wrong, and then green started dropping, representing the group that usually gets it right, yeah, what do you know? Prices fell off a cliff, and it really just has not been a consistent pattern for most of the past year. Now, if we go back to 2023, for example, much different story. Look at how prices climbed right after the retail traders started to dump their holdings, and they just continued to dump all the way through just about 1 year ago, late June of 2025. And that was kind of the warning sign. Yeah, we climbed a little bit more to that all time high, but again, that was mostly just because the key stakeholders were going up. But you want to be looking for key stakeholders going up and retail going down. We see the opposite right now. So, yes, things can happen that can quickly change this pattern, but based on all the information we know now and the way news is cycling, and what we know about Sailor and STRC, and the dominance that they have over the entire crypto market right now, and the growing narrative that crypto is a bit of a house of cards right now because of the Sailor situation. Yeah, we just have to be cautious because this is one of the most important signals. Not going to be investment advice. I want to make that clear. This is not an automatic implication that we're going to drop down to 50K or below, or that altcoins are all going to fall down a cliff, but just be careful. All right. A few trending stories to go through. Obviously, the World Cup is in the news. It's not really that crypto adjacent. The Robinhood chain launch is, though. There was a report about Robinhood Arbitrum and Off-Chain Labs launching Robinhood chain in Rialto to trade tokenized stocks, crypto, ETFs, commodities, and pre-IPO assets on chain. The SE chair Paul Atkins announced Project Crypto, saying the agents agency will modernize rules to push markets on chain and boost US leadership. Um, so I think mostly that's good news. It's giving people more options for tokenized stocks. Obviously, Solana has been a big beneficiary of that. And Solana has also been in the news due to the fact that uh, their new meme coin, Ansem, is driving uh, all sorts of polarizing opinions. From what I've seen, there's a lot of accusations of uh, Ansem himself being a bit of a scammer and people advising others to stay away. You know our take about meme coins. It's pure gambling. They don't have development activity teams behind them. Doesn't mean prices can't go up. We've seen through the GameStop madness, for example, back in 2022, the power of the crowd and the ability for people to push up Dogecoin when there's enough unity and backing, and obviously dry powder sitting aside for retail traders to make these coins pump. We've seen crazier things happen. I guess the main difference between now and 2022 was we were coming off of a really nice bull cycle back then. Um, and so there was dry powder and some room for flexibility and taking chances back then. Whereas on average, it does appear as though retail is struggling a bit more as a group, making it tougher to have a sustained period of time for these pumps to just continue to go up and up and up. Again, doesn't mean it can't happen, but it's more challenging, especially while Bitcoin is having trouble gaining traction itself, to just have meme coins continue to perform in a bullish manner. On-chain rotation is also being talked about. Traders and bots rotating assets fast. Somewhat of a generic summary. Fourth crypto buzz. You get the idea. And then I also opened up our alpha narratives that just got refreshed today. As of now, it's still being refreshed once a week, but our team should be giving an update in the near future to allow these narratives to actually update once a day, which is awesome because you can really use these topics to identify which are popping out at any given time and at what time, and then start to put together the puzzle of which of these big spikes are really coinciding with a big bullish bump or a big bearish bump all of a sudden. But right now, the latest one I see is about whales. Lots of discussion about whale moves across Bitcoin and Ethereum. As we saw with Bitcoin, at least, there are a lot less whale moves than usual, but there's still individual ones happening all the time. So feel free to read further into this if you'd like. Bitcoin ETF outflows. Let me jump to that really quick because I prepped that before I started this video. Um, Massive amounts of outflows. We actually did see the first big inflow day yesterday. I know it says July 1st, but it's actually July 2nd due to a time zone shift. Um, but yeah, we finally saw a big inflow day, which was the largest since May 5th, call it almost a 2 month high in inflows after almost exclusively seeing outflows for most of the past 2 months. So, not enough to call this a sudden turning point. Maybe there's some minor FOMO because people think we've finally bounced off of 60K for the first time. I would be still a little skeptical of that myself due to the dismal whale picture going on. But yeah, the amount of money moving out, if you just take the past 2 months as a whole, does paint a good picture that retail is not really trusting uh, Bitcoin and crypto the way they were, despite the fact that we looked at the on chain picture and it looks a lot different, where retail, at least in the on chain world, is still buying dip after dip after dip. So it's a bit conflicting. Uh, you know, I would I would not put as much emphasis on the retail crowd as the key stakeholders, but I'd say that on average, the ETFs have a much bigger mix of institutionals to go along with the retails. That's why I think this is just a good overall picture of how much distrust there is in crypto due to this long downturn. And that's among both institutionals and retail traders. I also refreshed our whale watcher just to see if there's any big moves. It's been mostly stable coins that have been just dominating. And that tends to be the case when markets are flat or in a bit of a bear cycle like they have been. Uh, Uniswap stands out. There was a $1.9 million move about 11 hours ago. A bunch of Ethereum ones. These are, we see a lot of them all the time, um, kind of scattered across this dashboard. This is sorted, by the way. Yeah, it was sorted by percentage of market cap, but you can also sort by the actual dollar amount. You can see a huge $43.6 million transaction about 11 hours ago. And just to clarify, this is specifically looking at deposits to exchanges. So the reason we look for non-stable coins here is it can indicate the potential of a major sell-off. So the timing of this $43.6 million Ethereum move could have been significant for at least a minor uh, downswing in Ethereum's price. And they moved to OKX during that time. If you really wanted to, you could open up the um, transaction and look through it more and find out if those coins were moved right after they went to OKX, meaning they were sold off. Um, but yeah, I just wanted to point out this dashboard here because we haven't talked about it in a few weeks and it's quite interesting. The activity matrix is my final stop here for today. Lighter is standing out as the hottest network. Hottest doesn't mean most bullish. Hottest simply means it's seeing the most abnormally high active addresses, network growth. That's what each of these individual red boxes mean if you lined it up with the columns that they're under. Whale transactions, looks like social dominance, exchange inflows are high. Even dormant movement is quite high right now. So across the board, lighter seems to be one to watch at the moment. I can just shortcut it and go to the leaderboard tab here where you can see the top 10 hottest networks according to their current values compared to their 3 month averages. That's how I set this thing up when I made it a few years ago. Synapse is up there, kind of an obscure altcoin, 281st market cap. Tether, interestingly, is seeing a ton of network activity. Morpho, KuCoin shares, Global Dollar, Eurocoin, 1inch, Ethereum name service, and Gnosis. On the opposite side, the coldest networks are Falcon, Shinfin, uh, what is this? Tether USAT. I'm not quite positive on this. I think it's just a separate Tether. Cardano, Axie Infinity, Frax, Humanity, So Value. I've seen this one in the news lately. I'm not sure what's going on, but some of you may. OKB and STPT. So that rounds off just an idea of which altcoins might be standing out now. Remember that when you see hot assets, it means that they're at a much higher probability of reversing direction at the time they become hot. So, um, if we were to look at lighter here, which is one of the best performing assets, you can see it's plus 113% price wise over the past 90 days. And it's now the hottest coin in crypto in terms of its network activity. That's a red flag, at least temporarily. Not investment advice. Lighter could still go up, but if you suddenly see that level of activity, I'm just pulling it up so we can illustrate it on our Sandbase page. It usually means there's a pullback coming because it had been going up so much prior to the huge spike. And it's likely due to a lot of FOMO. Yeah, so here's the active address spike and network growth spike. Just going to zoom in on price to see if we're starting to see a pullback. Yeah, a little bit. we'll see if the network activity stays high right here. But yeah, it looks like it's still trying to test that um, range of around 216 to see if it can make a higher high. But you got the idea. Even in the past, look at this active address spike right here, price goes down. Active address spike right here, price goes down. Even these little ones here, price had a little pullback here. Very good sell signal. Not always the case, but it's somewhat reliable, especially for altcoins that aren't getting as much attention. But that wraps it up for today, guys. Hope this was helpful. Thank you all for watching, and we will talk to you next week.